Thank you. Thank you so much. We've had such an amazing session this morning. I feel so blessed. Who else feels extremely blessed? You know, having the conversation on wealth creation and investing, what I found interesting is the topic of family had to come up, the topic of values, topic of behavior, topic of discipline, right? So when I think about the wealth creating journey, it means that we're actually doing this with a why, right? We're not just making money for the sake of making money. The reason why we're doing it is most probably, depending on your values, for me it's mostly for my family. I have 2 young children who I love so much, and even when I'm thinking about my protection or my investment portfolio, I'm doing it for them, and I'm doing I'm doing it for us as a family. So I'd like to now take a different direction, right? We've been talking about wealth creation this whole morning, investing with purpose, which I love. I love this topic so much. But I have a question for you. What is wealth creation or the investments we have if we cannot access them? Think about it. You have an investment portfolio. You've been building wealth over a period of time, but you have no access. How does that feel? Yeah? So one thing you need to remember is wealth creation without access to that wealth is an illusion, right? If I have money in my bank account and I go to the teller, or I even try to use my bank app and I cannot access that money, yeah, maybe I want to pay school fees or there's an emergency, but I have no access. How helpful is that wealth to me if I can access it? It's not, isn't it? This is what actually happened to me. I went to the bank and I knew there was money in the bank. And I tried to access that money, but I was told, pole sana, hapa, I can see you on next of kin, but you cannot access this money. Why do I even say that next of kin? So what happened is about 5 years ago, my husband died, right? He passed away suddenly due to COVID. And at that point in time, I was a stay-at-home mother. So you can imagine that he was the one who was doing the provision. So I was the one who was staying at home, taking care of the children, taking care of the family. And I was also the manager of the money in the house. That's why I knew the account had money. Yeah, because we had the conversation, we always had the money conversation. But then going to the bank and then standing there, it was already hard enough. I had no access to this money. So I want to use this money to take care of some bills in the house, but I'm told I can't use it. So I had no access to money. My husband and I were actually serious investors. Yeah, my husband loved to invest his money, and I was always there to help, yeah, because it was something that I loved also and something I had knowledge on. So we had no access to even his investments, yeah, because majority of them were in his name. You see, I found out the hard way that you can have money and you're doing this thing together, but it's not as helpful if you cannot access it. So yes, he is my husband. Yes, we had a marriage certificate, but no, I cannot access the money if it's not there. So no access to money in the bank, no access to our bonds, no access to the land we had. So you can literally see the land there, but there's nothing much you can do with it. Yeah. In as much as I had access to his pins and passwords, I was so traumatized I forgot everything. I had not put them down. So I could not even access, maybe even go to the ATM card and, use the ATM card to withdraw money, so I could not do it. So this is why the wealth protection conversation is extremely critical. Because in as much as we are creating wealth, we are investing, we are making money. What happens when the unforeseen circumstances happen? Will you or your children still have access to this money to help you continue with the day-to-day? Because this is the money that is used to pay rent in the house. This is the money that is used to pay school fees. Yeah, this is the money that you access to be able to take care of now the bills, water bills, electricity bills. But if I have no access to this money, it is of no help to me. Yeah. So our job and the conversation today, especially now when you're having this protection conversation, is to remove these inconveniences from your wealth journey, yeah, and from your legacy. Okay. Because another thing we have to remember is when it comes to investments, we talk about return on investment, the ROI, yeah? You put in money, what do you get? But I have a question for you. Do you have an ROI, which means return on interruption? The question is, how fast can you recover when life gets inconvenience? Yeah, all ROIs are important, but now, can you bounce back with the structure you have, the plan you have as of now? Can you actually bounce back from whatever it is that you are at? Okay? And today we're talking about from investing for growth to investing with purpose, yeah? So we've mastered the art of making money. Making money, as we've mentioned, is one thing, but keeping it and making sure that it is passed on to the next generation the best way possible and the most convenient way possible is a whole different conversation. So as of now, Kenya's new investor class is rising, but a lot of us do not have protection. Even when we even just hear the word insurance, our minds just shut out. Yeah, there's already quite the perception when it comes to the industry. But I really hope that during this session, you just open up your mind and open up your hearts. And I'd like you to do a lot of self-reflection so that you can see where the gaps are with yourselves and also with your families when you are planning for your protection. So that you do not just build without any wall. Think about it. Do you feel comfortable going to sleep at night if you've not locked the doors? Yeah? Or you don't have a security guard. But a lot of us are doing that with our wealth. We are busy building and building and building without asking ourselves, do we have something, a structure to make sure that even when something comes that is unforeseen, that it's not going to interrupt our wealth creation journey. Because it's very clear, you know that building wealth can take a lot of time. You're putting in money and you're expecting that money to grow over a period of time. Think about it, you've built this wealth for the last 15 years and then something happens. Whether it's an illness, because we know something like a cancer, a stroke can really, really take a lot of your wealth, yeah? Because remember, at the end of the day, you are your greatest asset. So if you are sick, you will have to liquidate everything or as much as you can to make sure that you get better. So the question is, okay, you are in your wealth creation journey, but have you taken care of these unforeseen circumstances? Because think about it, even with the panelists who have spoken before, they've spoken about, economic shock. Economic shock, we can recover. You've lost 2 million, you've lost 1 million. We can go back to the market and try and recover that. But are we prepared for life shocks? Okay? So when you remember that you are your greatest asset, you need to make sure that you as an individual are also protected. You and your family are protected. So I'd like us to go into our core philosophy when it comes to protection. Because most of us, when we think about protection, we think about insurance, but insurance is only one aspect. Protection is a combination of liquidity. Yeah? So what is liquidity? Access to money when you need it the most. If something happens to me today, like if I fall sick today, do I have access to funds to be able to take me to hospital? Like right now, because when you're sick, it can't wait. You have to go now. So number one is liquidity. We need access to money when you need it the most. Secondly, structure, which is the ability to make decisions that outlive you, right? So these are the systems that are required to just make sure that there's a way to move forward even when unforeseen circumstances happen. And another thing that has also come up very, very clearly this morning in the panel that was just before my conversation is open conversations. We are not having open conversations in our families. And the one thing I learned is silence is the most expensive clause. So if we're not sitting down at our dinner tables to have this conversation on, okay, so if you fall sick, how are we going to go about it? One thing I realize is a lot of families are very reactive. We don't like to sit down and think about how can we really manage this risk. Because we know as long as you're alive, as long as you're on this earth, there is a possibility that you might fall sick. Yeah, there is a possibility. You know, the reason why we're getting car insurance is because we know that you could get into an accident or, you know, your car could get stolen. But my question is, why don't you also ask the same questions about us as, you know, family members? And remember, we are our greatest assets. Interestingly, we would protect our cars, we'll protect our houses, but we will not protect ourselves, okay? So that is something to reflect on. And this is why now we're going to discuss about how you can build your protection wall. So I have spoken about the 3 core pillars of wealth protection, but today I'll only speak about liquidity and partly structure, because if we're to go to open conversations, it can take us forever. Maybe I'll just touch a bit on it, but today we're going to look at how can we create a proper structure to just make sure that in the case life was to happen, my family will be minimally interrupted, yeah, from the shocks of life. So look at the very far end of this diagram, yeah, that's you and your family, and there is the investment component. The reason why we said we're investing is so that now we can be able to, you know, provide for our families, live a certain type of lifestyle. So the reason why we are investing is to be able to provide, you know, like whether it's cash flow to the family, the income, to just make sure that we are living a comfortable lifestyle. But then we have to ask ourselves, when these unforeseen circumstances happen, so could be job loss. We've seen a lot of companies shut down. Those are families. You know, sometimes we just look at these as numbers, but when you see, 1,000 people have been laid off, those are 1,000 families that have been affected, right? So those are the things that you need to think about. These are people with lives and families, and their lives have just been interrupted. Then we have a sickness. Yeah, someone falls sick. The reason why we are in a lot of these WhatsApp groups is because we need to raise money for people who have fallen sick. And you see, something like an illness, you cannot really predict that it's going to happen, like an illness or an accident. But sometimes it does happen. You can do everything right. You can eat healthy. You can go to the gym. But sometimes you can just fall sick and you don't even know where it came from, okay? And then there is disability, yeah? We've seen people who might have gone through stroke and now maybe are, you know, paralyzed on one side. So they are not able to do what they could before. This will affect their wealth journey. It will affect their families, not only themselves. The reason why I had to put open conversations as part of a very important pillar in protection is because if I fall sick, it will not only affect me and my wealth, it will affect the people who care about me, the people who are around me. Because if I do not have enough money, they will have to raise money to take care of this whole situation, right? And then the one aspect we don't like to think about, which is death, right? Which is going to happen to all of us. It's just that it's quite an uncomfortable conversation, or it's not something we like to think about, but it happens, yeah? And the question is, if a death happens and the person it happens to was a provider, worse off is he or she was the only provider. It means they have passed away with their ability to create an income for the rest of their lives. So they lose, all of us, I need us to remember, all of us has what we call an economic value. Yeah, every one of us. There is us going to work, us investing, and we're making money for our families. What happens if something happens to us? What happens to our families? Will they still be able to continue the same lifestyle, whether we are in the picture or not? So I would like you to now maybe think about it, not necessarily from an aspect of, oh, this is sad, this is, you know, like we're talking about death, disability. Think about it as a continuity conversation. Yeah. If something happens, we are going to be minimally interrupted, but at least life still has to move on. Life still has to continue. Okay. And then, just as I've mentioned there, liquidity actually gives you the permission to take bigger bets as an investor. If you know that no matter what happens, I have somewhere to land on, you can be able to take more risks. Yeah, even like for me as an investor, I have my emergency fund. I have an equivalent of about 12 months of my monthly expenses, yeah? Because I want to know, in worst case scenario, I can survive, my children and I can survive 12 months. And the reason why I've done 12 months is because I know, with the knowledge that I have and the connections that I have, within those 12 months, I will make something out of it. Yeah? It's not the end. All I need is a buffer, because I do not want to come from a place of survival mode when I'm making my decisions. So I need that buffer. I need liquidity. I need the cash. And most investors actually break their momentum because of unplanned emergencies. Yeah, you did not see this coming and then it happened. Think about it. The example I like to give is, think about life as a journey. Yeah, if you are going to go for a safari and you take your car, are you going to take that car without a spare wheel? Is that smart? Because you know that this is a pretty long journey. Maybe it's going to be the next 8 hours. And then I can be the best driver, but I don't know what could happen in the way. So my focus is not necessarily going to be, oh my God, I'm so scared that I'm going to get a puncture. My focus is, I want to enjoy this journey, but if I get a puncture, I have a spare. So everything is just how it is that you perceive it and how exactly you look at it. Because a lot of us are now focusing on the spare tire. Like, oh my God, all these bad things could happen. But you should focus on the journey, on enjoying the journey, knowing that even if this journey was to be interrupted, I have backup plan and I can still move forward. So now let's go into the actual structure, the protection wall. Yeah. So we have 5 tools that we have put in our protection basket to just make sure, even in the case of unforeseen circumstances, we can still move on, we can still move forward. So every investor needs a strong wall to protect their dreams from disruption. Okay? Because as I said, a good traveler is someone who already plans ahead, who already has the spare wheel, already knows that in case anything is to happen, I have a backup plan. Okay. So number 1, we have the emergency fund, which offers immediate cushion. We're going to go deeper in it shortly. But I've had the panelists speak about it, and so I will not even spend a lot of my time there. And then we have medical cover, protect against sudden medical expenses. Yeah, as I'd mentioned, if something happens to me right now, a medical emergency, do I have access to the doctors? Because access is everything. It doesn't matter even if I have prime property in Karen, if I cannot liquidate it immediately to take me to hospital, it does not have any use to me today. Yeah. And then we have life cover, which is guaranteed liquidity for your family. We'll also get into that. Then we have trust fund accounts, structure and control for your children. I'll also explain that. This will just lay the foundation of what you're going to speak about in the afternoon. And then pension, which is the future income security. Let's start with your emergency fund, which I believe is the first line of defense. When you think about the diagram I'd shown in the beginning, when all those things are coming your way, there was that part, yeah? What is the first line of defense in the case of unforeseen circumstances? So this is your short-term liquidity shield. So this is a fund, depending on what you're comfortable with. Some are at 3 to 6 months of expenses. Also depends with your family dynamics. Are you both providing for the house, or is it only one person? Are there children involved? Are you in business or are you employed? For some of us who are in business, we need to have a bigger pot. Yeah, because sometimes, and there's also unforeseen circumstances even in the market. You just need to make sure that in case of anything, there's that level of continuity, at least at a family level. So yes, there's taking care of the business, but I am the one who's running this business. I need to make sure that me and my kids are also okay. So why does it matter? I want you to look into that question and that statement. Without liquidity, every crisis becomes an investment liquidation. Okay? If you have no liquidity, and you have investment somewhere, you will have to liquidate it to take care of that emergency. You cannot tell me that you're going to sit down, your investments are still growing somewhere, and you have something that you need to take care of now and today. So it's either that, or you might have to take an instant loan, which can end up being very expensive, or you have to borrow from somebody. But if you had already planned ahead and you had some level of liquidity, that means that you can move forward because you already planned. Yeah, it's not that you're sitting down, as I mentioned, that you're wondering all the bad things that could happen. It just makes sense and it's prudent to just have your affairs in order. Okay, and so most investors actually break their momentum because of unplanned emergencies. Protecting cash flow means protecting your confidence. So as we had mentioned, when you're thinking about your emergency fund, you should put it somewhere which you can access even within 24 to 48 hours, should not be longer than that. You need to know that in case something was to happen today, I can liquidate that money immediately. So I personally have some money in my bank account, just a bit, yeah, just in case, because you see with money market funds, I can liquidate it in the weekends. So I just put a bit of money, like about 30, 40,000 just in my bank account, just in case something happens in the weekend and I need access to fast cash. But the rest of it, I just put it in a money market fund so that, because I know that it preserves capital. And if I need it, I can get it within 24 to 48 hours. Yeah. So at this point, we are looking more at the liquidity over the yield. So when you're looking at emergency fund and where you're going to put it, you're not going to be saying that, oh, I'm looking for a place that's going to give me 15% per annum. You want somewhere that in case something happens today, you can access that money today. Okay. So it keeps your investment strategy intact during the shocks. Because look at it this way, if you're putting your aside money for your investments, or you have an investment that you're looking into, I mean, for this investment to run for the next 10 to 15 years, you don't want to touch it because you want it to continue growing. The moment you touch it, that means the money will not grow as fast as it should because you have interrupted that journey. So if you have an emergency fund, that means you already have access to liquidity. You can use that and the investment is not touched and it continues growing as planned. So I want us to do just a short exercise, which you could just put it in your notebook. Write down your monthly cost of living. So that means I hope a lot of you or all of you have a budget, because the only way you can know your monthly cost of living is if you have a budget. You know how much money actually goes out, yeah? And then you multiply it by 6 or your target number. So that will be your peace of mind target, yeah? So you have to ask yourself, where does that money sit right now? Yeah? Is it accessible or is it locked up? Because a lot of you say, oh, I have money, but it's in a bond. You can, with bonds, yes, you do get the coupons, but the actual bond to try and liquidate it is so hard, yeah? So it's good to just have that just know, okay, in case of anything, can I have access to this money? Some people tell me, oh, my money is in a circle, but we know that you cannot just withdraw that money in a circle. So they tell you have to take a loan against your own money to get access to funds to take care of that emergency. So it's just good to have some money in a pot somewhere to just make sure in case of any unforeseen circumstances, you have access to money. Liquidity is very, very important. But now, yes, we have started with our emergency fund, but there are some emergencies that an emergency fund cannot take care of. If someone gets admitted, yeah, to at this point in time today, and first of all, let me tell you, if you're not aware, for you to even get an admission in a hospital here in Nairobi, you better have 150,000 cash just to have access, or they'll even just leave you there by the reception. So it's either you have that cash or you have some level of medical cover. I remember some time back with a family member who fell sick in the middle of the night, and she had no medical cover, obviously. So we had to raise money at night. We had to start calling each other in the middle of the night to raise that 100,000 so that they can even just give her access to a bed. So other than just the financial stress, there's also now the emotional stress, because your person is there in the reception. Yeah, you don't even know what is going to happen. So what a medical cover does is give you access to these doctors, to the hospitals. Think about it this way. So health is the engine of productivity. One medical emergency can destroy years of disciplined investing. In Africa, even in Kenya, one illness can actually liquidate 15 years of investing. Let me share a story, because having been in this industry for a very long time, I have seen so much. A few years ago, we were planning for one of our clients. She came in because she wanted to plan for her retirement, her and her husband. And when I was looking at their retirement portfolio, their overall portfolio, investment and retirement, the one thing I saw that was missing was an insurance portfolio, a life cover and a medical cover. They had a medical cover through their husband's workplace. She was in business. So I told them, okay, here I can see a gap, and we need to close this gap, because in the case of anything, this whole thing is going to be interrupted. So what happened is, the husband was like, no, we don't need that, because we have some endowment or education policies. So I was like, okay, fine. I think I should have pushed a bit more. The way they tell us insurance agents, we push too much. Maybe in this case, I wish that I actually pushed. So what happened is, last year, she called me and she said she wanted to see me. So I went to see her. I'm telling you, there's nothing as painful as seeing someone who was healthy and now they have no hair. They had some things on their skin. So she had contracted cancer. Unfortunately, during that period of time. And the worst thing is their medical cover was depleted. The one that they had through their husband. And because of that, do you know what we had to touch? Her retirement portfolio. Because in as much as we were planning for, because at that point she was in her 40s, So that means that she had about almost 20 years to go before she was to retire. But now we had to interrupt that specific portfolio, and even one trip to India costed her about 6 million. That was the first trip, coming from her own cash. I don't know if you understand how painful that is. Even if I had 6 million in my investments or 6 million in my bank, I don't want to use it to treat an illness. Okay, that was the first trip. The second trip cost her almost 5 million. That's already a good 11 to 12 million of her own money. Okay. And the worst thing is, we don't know, she's still not healed, and we don't know how long it will take before she's completely okay. But you see how illness can really eat into your wealth. So you've built, she started her businesses and her investments when she was in her 20s. Now she's in her 40s, she has to liquidate them. She literally, even if now she was to get better, she will have to start from scratch. So this is why we keep on saying it is important, even as you're building wealth and creating wealth, it's good to just put that protection measure to just make sure that there's something that will be liquidated immediately, so you do not have to touch your own investments. So when it comes to now application, it's so important to prioritize inpatient cover, because things like, going to a gyna or outpatient where I have a flu, even if I'm to call one of my friends and I ask them for 2,000, 3,000 shillings, it's not stressful, But will you call a friend for them to give you 2 million shillings because you are in hospital? Okay, it can be hard, So this is why it's important just to, first of all, make sure you are prioritizing inpatient. And when it comes to insurance, I always tell people, prioritize the thing that if life was to happen today, you don't have access to that liquidity now. These small things, especially outpatient, I can. So most of the time, I don't even pay for outpatient cover, because I'm grateful to God, we are a pretty healthy family. So I just have a medical reserve for that. But now when it comes to inpatient, I don't even know, first of all, how long someone is going to be in hospital, what condition they're going to be in, and how much it will cost. So this is how people have very low inpatient cover. So it's important now to go back to, even if you have one through work, just go back and check the numbers, because sometimes they give you a very, very low inpatient that in case there was an emergency, because think about it, a day in the ICU can be 100 to 150,000. Yeah. So if you have a 1.5 million shilling cover, how long will it take you? And then another aspect that a lot of us don't put into consideration is with these medical covers, there's sublimits. You find that someone is in hospital, you know you have a 5 million shilling cover, and then you're told, oh, your cover is over. You're like, what do you mean? I'm covered for 5 million shillings. It's because you didn't check the nitty-gritty in your policy document. You see, this is what gives us in the insurance space a bad name. So most people are like, oh, I thought I bought 5 million. But you see, if you were to sit now with an agent, a good agent, they can actually break it down and share that, oh, if you're to contract a cancer, you can only be covered till 1 million. If you have a pre-existing condition, it can only be covered to 400,000. So now you can plan around that. So it's worse that you go to hospital, you're in the hospital bed, then you realize you don't have the money. That means then, even if you had cover, you still have to raise money somehow. So either liquidating something, or people will have to open a WhatsApp group to take care of that. So yes, the first thing is to have the inpatient critical illness benefit. I'll speak about it in the next section. Supplement it with outpatient, maternity, critical illness riders if your budget allows. Yeah. And then I'd like to say something a bit about maternity, because a lot of people usually ask me, why does it have like a 10-month waiting period? Because a lot of people come to us and they're like, oh, I'm pregnant. Can I get medical cover to take care of this pregnancy? Yeah, only to find out that that is not possible. Why? So this is why it's important to understand how insurance works. You have to take insurance before the particular situation happens, right? So if you take if everyone was to fall pregnant and then go get insurance, the insurance will be out of business. Think about it this way. You have a car, and then this car got into an accident. Can you go back to the insurer and tell them, oh, my car got an accident. Can you please give me insurance so that you can pay for it? Yeah, it doesn't work like that. So even it's the same now with pre-existing conditions, pregnancies, because a lot of people usually wonder, why doesn't the insurer just take care of this thing immediately? Unless maybe you are under a corporate cover, but generally there's always the waiting period. So it's good to understand why that is there, but it's now important to know how insurance works. You have to get the insurance before the unforeseen circumstance happens. That's how it works. And then now when it comes to medical insurance, just as I remember Rina spoke about it, it's important for us to have these conversations in our families, because if your brother falls sick and they don't have medical cover, you will have to go into your pocket. It means it will also disrupt you. Again, will you now have to access your own emergency fund to take care of this? Or now maybe you'll have to be in the committee of the WhatsApp group to now raise money for your brother. Yeah. So when it comes to medical insurance, there's all levels. There's from budget covers to premium covers to even international covers. There's even covers of even 12,000 per year. Just if there's, that you have a family member who cannot afford, it will actually be much cheaper for you and give you more peace of mind to even get them, even if it's a small cover. Yeah, maybe the ones who can help the ones who cannot. And I have seen this especially with people who are taking covers for their parents. Yeah, because our parents try to convince them sometimes to take insurance in general. What we get to hear is, God is my insurance. I hear a lot of that. They're like, apana. So with them now, you'll have to buy for them. You have to maybe figure out how you can come together and raise money, because if there's a medical emergency with our parents, we are not going to sit down and do nothing. You will have to raise that money. Last year, we had a case where a parent fell sick. They had something to do with the brain. And the hospital bill came to about 5 million, yeah? But the good thing is the daughters had come together, 3 daughters, to buy their parents a medical cover. So the whole thing was covered by insurance, yeah? But now imagine if they didn't have it, they would have had to now start running around. It's already stressful that your parent is sick. You don't even know what is going to come out of this, because if it's anything to do with the brain, you just, you're praying about it. And when they're of a certain age, you just hope that they get through it. But you see now, if there's no insurance on any level of protection, you'll have to now go back into your pockets, yeah? So please, sit down and have these conversations in your families. Go, first of all, check your own cover. See if it's sufficient, especially inpatient. Even if you have one through work and it's not enough, just supplement it with a good inpatient cover. And then also for your loved ones around you, because if they get sick, you'll also be affected. Your money will be affected. even if you're to start them with just a budget cover, just start them somewhere, okay? And then, yeah, this is why I said with the exercise, just review your medical cover. Please, when you go back home this weekend, a lot of us are signing things we don't understand. You don't even know. You don't sit down and check, what am I actually covered for? So you can be able to see the gaps. And if it's something you don't understand, just seek help. It's better to know what you have and what you don't have compared to now life is happening and that is when you're finding out. Okay. It's very important, again, like I like to really emphasize on taking care of your health. I feel like that is the first part of protection. Make sure that you're controlling your health with daily habits. We're trying as much as possible not to go to hospital. Yeah, I understand you can still do all these things and still go to hospital, but try as much as possible to take care of yourself. As we've mentioned, you are your biggest asset. So eat healthy, maintain a balanced diet, rich in fruits, vegetables, lean protein, move your body. Yeah, regular physical activity is so important. And the annual wellness checkups. How many have gone through to an annual wellness checkup this year? How many of us? Okay, that's actually a good number. Because the one thing we realized is, especially the people who get to, find out some of these illnesses, early detection would have been key. Some of them just don't do the wellness checkups. You feel sick and then you just brush it off. Yeah. And then now the moment you find out, maybe it's already like stage 3 cancer, with something someone could have found out earlier and then have to seek treatment quickly and they're good. Because we've seen someone who there was early detection and now they are cancer free because it was detected earlier. So make sure that you also have the habit of living healthy and just always make sure that there's that annual wellness checkup you put in your diary every year. So now we're going to go into life cover. Yeah. The seed capital of your legacy. I think this is the part or the aspect that a lot of us don't understand, because when we think about life cover, when what we know is education and endowment policies, but we don't even know fully how life insurance works and why it was even created in the first place. Okay, so what does a life cover do? We had mentioned earlier that all of us have an economic value. All of us, each and every single one of us, especially if you're someone who's at this point in time providing, whether it's to your kids, whether it's even to your business, yeah, you also have value, an economic value to your business. You're an asset, yeah. If you're providing an income, and then the moment that you are not there, there's going to be a gap. What life insurance is meant to do is to fill in that gap. Think about it. We cannot really save. Okay, say we are expecting, by God's grace, right now I have my kids who are 5 and 6. The one is turning 5 and another is 6. That means I have maybe another about 20 years of taking care of them until they're out of university. Yeah, I said I'm going to be in my kids' lives as much as possible and provide for them until they are done with school. And because I need to make sure that, especially at this stage when they are fully dependent on me, that I am able to provide. What happens if, unfortunately, I was not there when they are 10 years? Yeah, so it means between them at the age of 10 to 25, where's the money coming from? Because they cannot come and run my business. Yeah, and then with the investments, I don't even think they have knowledge of investments at that age of 10. And even legally, they cannot really control money at that point in time. So how can we ensure that there is continuity in their lives, no matter what happens to me? Okay, that is now why life insurance matters. I want all of us to do just a small exercise. How many of us have a car? How many have a car? And does your car have insurance? So that means you have actually put value on that car, yeah? Because anything we value, we protect, yeah? And then how many of us actually have insurance on our own lives? Yeah? Because do you mean that your car has more value than you? Yeah? Because think about it this way. A car is a machine. And let's say you have a car worth 3 million and you're paying insurance for it because you know, oh, in case anything happens, I want replacement of this car. But you, as the greatest asset, because you are the one who had to go to work, to be able to make this money to actually buy the car, you have no protection on yourself. So I want everyone to just put their hands on their chest like this and say, I have value. I have value. And you need to protect that value, please. Yeah? What are you worth? Yeah? What are you worth today? Let me share a short story. I know Rina had spoken about it, so let me share. The reason why I even got really into this whole life insurance conversation is based on a client of mine I had a few years ago when I used to work for a mergers and acquisitions company. He was Asian. So what he told me is, first of all, he does not believe in loss. Yeah. So because he does not believe in loss, it means that each and every person in their family has life insurance on their head. Each and every one. So if one person transitions, there's money back into the business. So it might sound cold, but that's how it is. Because think about it, for us, when someone passes away, we will cry and we'll feel the pain. Because not only have we lost the person, but they are a value for the rest of their lives. Yeah. So that's what he told me. He told me that, first of all, he runs his family as a business, and secondly, that he doesn't believe in loss. So every loss has to be paid for. Yeah. And because of that, the moment their children hit 18, they have life cover on their heads. So think about it. If everybody in the family has 50 million shillings on their head and it's a family of 5, yeah, that's a whole 250 million in that household. If one is not there, that 50 million can be used for something. Because think about it, what actually gives you value, right? Let's think about it from an economic standpoint. You have your brain, you go to work, you have all these ideas, you have your intellectual property. If you're gone, you go with it. Yeah? But you see now, if there was now protection on you, that means that it will come back into the family. So that means there was no loss. So I learned so much from him because that's how they do it. And how the biggest one that I saw them ever taking was about $8 million. That means there is someone out here walking, talking billion shillings. Yeah, that is $1 billion shillings into that household, because all of us are going to transition at some point. And eventually it will go back into the house, into the family. So what he told me also is he is looking at it from a family standpoint, not for him as an individual. So it is going to add value at the end of the day for the family. And this is an amount of money that can be used for education. It can be used even for them to take the company to the next level. So always just think about yourself as an asset and how it is that you can add value also to your family. So when it comes to application, you know, there's the different types of covers. I don't know if I have the time to go about it, but the one which he had is what we call whole life cover, because it lasts the rest of your life and it's definitely going to pay out. So you pay for a specific term, whether it's 15 years, but you're covered for the rest of your life. So think about it as a legacy tool that gives instant liquidity, because life insurance pays within about 10 days, 7 to 10 working days. That is money into your family with no tax. So that's how they keep on now pushing this generational wealth. So yes, there is your investments, but with this one, it's not dependent on time, how long you're going to live, because again, nobody knows. Because you see now, for you to invest to reach maybe about 50 million shillings, it may take a lot of time. But for me, as at the point where I'm 35 and I take a 50 million shilling cover, all I'm paying is about 35,000 shillings. So it doesn't matter if life happens within a year or God gives me a long life, I go by the age of 80, that is an amount of money that is for sure going to go into the house. So this is a small exercise. Multiply your annual income by 10. So do you know, you take your monthly income, whatever it is, then multiply it by 12, then by 10. So that should be your minimum cover. Yeah. So if you're earning 500,000 shillings times 12, that's about 6 million. You should have an approximate amount of 60 million shillings worth of cover. Yeah. So look at what you already currently have, whether it's absolutely no insurance or you have some level of cover, whether it's through other policies you have. So take that difference and you see how much you could be underinsured. Yeah. So yes, that is the amount that ensures your family's rhythm never breaks. Yeah, that is so important and critical to note. And as I said, make this a family affair. I know people have the fear like, could someone do something to me? Because that is actually one of the greatest fears. But this is something that is very important, especially if you are a couple, you are taking care of your children. Some of us are taking care of kids by ourselves. So we are our kids' everything. Yeah, because think about it, even for me, in as much as I didn't have access to my late husband's bank account, but what he had was a life cover. It wasn't much because at that time when we were taking it, we took the cheapest. Yeah, because we were like, we're not going to go anywhere anytime soon. Yeah, so we just took just to tick a box. You know, when it's like, oh, emergency cover, emergency fund tick, medical tick, so life cover. We're like, okay, let's just put something small, and that something small is what really came through because it paid out. It didn't have to go through the courts, and then I was able to take 1 year break just to try and figure my life out. Because at that time, as I'd mentioned, I was a stay-at-home mom and I had 2 young children because at that time my daughter was 17 months and I was pregnant, so a newborn. Yeah, I didn't want to go back to employment. I wanted to be there and be present for my kids. So if we didn't have any level of protection, that would have meant that I need to go back to work immediately to be able to take care of them. But it gave me a runway for about 1.5 years to just figure things out, where I know my rent is paid, food is taken care of, everything is taken care of. Okay. So it's very, very important. As I said, if you have a family, if you have anybody dependent on your income, please just even if you have to start small and you build your protection portfolio over time, just remember this is additional value to your family. And I wanted to really mention this beneficiary versus next of kin because a lot of people confuse it. Because yes, I was the next of kin in the bank, but next of kin only means that to be contacted when something happens. Yeah, I really don't have the power to receive. Yeah, so even in the bank, first of all, if there's one thing I learned is in the bank, they won't give you any money. Yeah, they will not, because the amount of money is tied to the person who's passed away. It goes into their estate. And until the courts have decided who this money goes to, you have no access. So for me, just to put it into perspective, I've been in the courts for 5 years. So if I was to be dependent on the money in his account, in the investments, where would I be right now? Yeah. So it's important to know, yes, next of kin is important to update, but also remember that it has no legal right to inherit. Yeah. And beneficiary is legally entitled recipient. This is why when you're filling in your life insurance forms or like the trust fund forms, you have to put a beneficiary. This is the person who's going to receive the payout. Even for the people who are employed, make sure you are updating this. Yeah, in your group life, or even some medical covers have a last expense. Because one thing we realized is sometimes when you are single, you put your mom. When you get married, you forget to change it. Yeah, because I have been in a situation and I've seen a situation where someone forgot to update it from the mom to the wife, and it became extremely dramatic because the money was paid out to the mother and the man did not want to give the wife the money. And this woman had 2 young children. So she had to move back to her parents' home because she had no access to funds because the husband, I think, maybe forgot. We're hoping he actually forgot, not that he did it intentionally. But you see now, what happened is the lady ended up, dividing the money with her own children. The guy's siblings. Yeah, he didn't go to the woman and the kids, so she had to start from scratch. So again, naming your spouse or sibling as next of kin does nothing legally. So naming them beneficiary is what is important. So always go back, at least even whether it's every quarter, semi-annually or annually, just go back to the documents because such a small thing can be very detrimental when the time comes and someone has no access. As we said, wealth without access is not very helpful, is it? Okay. So again, instead of now, as I said, thinking about life from a death perspective, life insurance from a death perspective, think about it as speed of liquidity and control over who gets what. So let me rush cash management trust. So what has been happening? Remember, with life insurance process, what we said is the lump sum is paid to whoever it is who is beneficiary. But what happens if your beneficiary is under the age of 18 and they cannot access money? So about a year ago, I was in the front row to witness an amount of money being paid out by an insurer, but it was paid to the guardian because the child was under the age of 18. The parents, unfortunately, both passed away when the child was 5. So the guardian was one of the parents' sisters. The money was paid, I think about 40 million was paid into the account of this guardian. Did this money reach the child? So you see now what happens is when money is paid into the bank account, for us as whether we're in the insurance space, now it's out of our hands. There's nothing we can do about it. The money has been paid. We've made sure the money is paid. What they choose to do with the money is now up to them. We are really hoping and praying that you picked a good guardian. Yeah, but you see now in that case, now what we got to know and find out is they use the money as capital injection into their business. Maybe they could be coming from a good place. Yeah, I don't think everybody is evil, but maybe she said that, okay, I'm going to put money into the business and then it will take care of the child. But how sure are we that this money will actually go to the child, or even this business will do well? And another thing we don't think about, this sister could end up getting married and maybe they use that money to build a house. So is that house going to be marital property? You see, so the reason why we have to introduce the cash management trust is instead of the money, especially for those who have children under the age of 18, yeah, or even at 18, if you received 40 million at 18, will you know what to do with it? Yeah, think about it at that age, 18 to your early 20s. So the cash management trust is a regulated investment trust where you deposit money or funds for a beneficiary. So instead of the money coming into the guardian's account, it comes into this pot called a trust fund account. Yeah, and the money is going to be distributed based on your instructions. Yeah, so we really pray that a lot of you are legacy thinkers and you have foresight. So you have to sit down and create structure. So this is part of structure. So liquidity without structure means that this money can also disappear. Yeah, because we've seen that the two parents took a cover so that their children can continue with life, but the money went into the guardian's account and the money is not reaching the child. So how can we make sure that the money reaches the child, or just to make sure that there's a bit of boundaries between what is the money that belongs to my kids and what their money is, so there's no mix up. Yeah, because again, as I said, that money, she can use it for her own children. There's nobody now to supervise. So think about this cash management trust as a way of you supervising this money, whether you are here or even in the beyond. So structure converts love into clarity. So families collapse in crisis because no one knows who to control the cash and how to access it. So we just want to make sure that there is immediate continuity no matter what happens. So how does it work? It works similarly to a money market fund account. The biggest difference is the entity it's on. Yeah, the trust entity. Because you see now, with the money market fund account, in case something happens to you, it still has to go through the courts because it is in your name. Yes, I understand there's a beneficiary designation, but yes, let's say, for example, you had put your spouse there and your mom comes and say, even me, I used to depend on John. Now it will have to be stopped and go to court, yeah, so that they can determine who's going to receive what. And then also, again, the reason why it has to go through courts is because you could have creditors. Creditors have to get their money whether you are dead or alive. That is why when someone passes away, it has to be gazetted. So if you have someone's money, they will see that you're not there anymore. And then they'll come to the courts to declare and say that, oh, I want my money back. So they'll have to eat into your estate. So if you don't have any liquidity, that means that now these are the family dramas which end up happening. So whether it's fighting within families or even now with creditors, it can get extremely chaotic. And the reason why we're creating this protection wall is to minimize this chaos. Yeah. So yes, so as I'd mentioned, the cash management trust, you can contribute to it just as similarly as a money market fund. It has no cost of setup because, as I'd mentioned, the trust is already existent. Think about it as there's already an existing building. All you want access is an apartment. You just want a roof over your head. You don't have to own it, but you can still sleep there. So you have access to it, but you don't really own it. But at least you can still benefit from the fact that in case anything happens, there's still that continuity, because trust structures in the country you doesn't have to go through the courts. But I know in the afternoon, Rono is going to go deeper into it, because now, especially for all of you as investors, it is very critical you have a trust so that these things don't go through the courts. You'll bypass the courts. It's rather spending that maybe 250, 300,000 in a family trust compared to now having to pay lawyers. I have gone through a series of quite interesting lawyers in my journey, and it's very expensive, yeah. But you see, now with a cash trust, someone only needs like about 5,000 to start. So even if you don't have the money to set up your family trust from scratch, you can just open a trust fund account, and then you attach your life insurance as funding source. So in case anything happens, instead of the money flowing to the guardian, it flows into the cash trust. And then you define the rules. What do you want it to be for education, for health, dream funds, how exactly the withdrawals can be done. Then you add your dependents or the beneficiaries by relationship if it's your kids. And then you also have to have a guardian, the person who is going to be living with the kids, yeah? So unlike a bank account or other investments, a trust does not freeze upon death. Yeah, because you've removed ownership from yourself to the trust. So if one passes away with their 10 million shilling cover is paid into the cash management trust, and then the trustee immediately starts paying the school fees, the medical bills, the living costs. So how it works is the moment the money is already in the trust fund account, if you say that I want this money to be used for school fees, what the guardian needs to do, the person who's actually living with your child, is to send the invoice to the trustee. And then the money is paid directly to the school. So you see, the guardian is not touching the money. So big purchases, big payments are paid directly to the institutions. Things like upkeep is what the guardian can touch, because things like food, clothes, that's what they can actually have access to. But the bigger amounts, they will not access. And then eventually when the child is of age, they can have access to their own trust fund account. So it's really good when it comes to now protecting your life insurance proceeds and just making sure that there's continuity. Because let me tell you something, if life happens today, what you need is cash. Yeah, I told you, even if you have prime property, I don't know where, it will not help. You cannot go to the hospital and tell them that I have prime property here. They need the cash. You cannot go to Carrefour and say, I need milk because I have prime property here. They'll be like, show me the money. Where's the money? Yeah. So this is why liquidity is so important. Okay, this I'm not going to go into it because it's going to be in the afternoon session, but I just wanted you to see the difference between a cash trust and a private trust. So cash trust is not only for cash, yeah. The other can also hold other assets, and this one offers instant liquidity in case of anything. And the role of the trustee in this case is to manage money, and then the role of the guardian is to raise your children. Yeah, you have to ask yourself, who's the person who I trust the most with my kids in case something happens to me? Because if you're married and you're a couple, it means in case something happens to you, it's automatically the other spouse. But we've seen situations where something happens to both parents. So who is next in line? You have to ask who is next in line in case of anything to take care, so that it doesn't have to go through the courts. I've been in the courts and it's so sad to see how children really go through it. Yeah, I'm seeing children fighting with their guardians, and the reason why they're fighting their guardians is because money was left and the guardians misused the money. Now they're of age, they can take their guardians to court, but there's no money. The guardians finished it. So even if the court says, go pay this money, where is it going to come from? Even if they're to be arrested and put inside, where's the money going to come from? So now to prevent that, you just need to make sure you have a proper liquidity structure that is going to ensure that this money is protected for the benefit of your kids. Yeah. So a guardian, even think about it this way. Like nowadays, if someone comes to ask me to be a guardian, I always ask them, do you have life cover? Because right now I have 2 kids and I can afford only 2 kids. If you bring me 2 other children, where am I going to get the money from? So you see now, this is why I say open conversations are critical. Because yes, you'll be like, oh my God, I'm so honored to be a guardian and a godfather or godmother of your child. But do you know the responsibility of being a godparent if they are going to bring this child? Okay, now your children are going to an international school and then you've been brought 2 other children. What's going to happen? Are you going to now take these children to a normal primary school and your children will continue going to an international school? Then now these children will grow up feeling some type of way. They'll feel like they were not wanted. And another thing we've seen is because there was no money that was put aside to take care of these children are bounced from house to house. Because now it will be Sister A taking care. But again, I get tired. now goes to the other person. So they are taken around. There's nothing worse than feeling rejected and not wanted. So when you have a plan, you've sat down with whoever you want to be as guardian. You understand their values. You understand even something like religion, how it is that the one thing I usually look at when I was picking my guardian is, how are they also raising their own children? Yeah, if they were to raise my kids, will I be okay? Yeah, so those are the small things which are not too small you need to take into consideration. Yeah. And lastly, there's the pension fund. I will not spend a lot of time here because I know we've spoken about it, but this is now your future liquidity plan, the source of income that pays you when you can no longer work. Sometimes, yes, we say no longer work, you don't want to work, but when you are in your 60s, 70s, sometimes you might not be able to, provide or to work the way you could before. What is an interesting statistic is Kenyans are one of the poorest retirees, which to me does not make any sense because Kenyans are very hardworking. But interestingly, most people only have an SSF. They don't put money aside for their retirement. And you know what that means? It means if you don't put money aside for retirement, your children will have to bear that weight. That's where now this black tax comes in. I hope we are the last generation to do this because it's not interesting taking care of your own children and then you have to take care of your parents. It's different that when you just have to give them, like, okay, for me, I pay my parents' medical cover because I can, it's something that I've put it for myself, me and my sister. But it's not a place where I have to take care of them. They have their own money. For me, it's just like, thank you for raising us and taking care of us until where we are now. I don't have to, but I just want to. But you see now, if you don't have a pension or you don't have a retirement plan, you will have to. So you have to take care of your kids' education and you have to take care of your parents. And it can also get expensive with age because of now maybe medical costs. It's not a joke. So you want your children to live a certain lifestyle, to go to specific school. But who do you pick between your parents and your kids? Yeah? There's the ones who raised you and the ones you are raising. But because the ones who raised you didn't take care of themselves, it means that the ones you're raising will have to take a hit. And then now what about you yourself? You don't even have anything left for you. Yeah. So it means you right now has to take care of you in the future. So why does it matter? This is the final layer of the protection wall that sustains the rhythm long after your active income stops. Because how we're looking at it, remember we're talking about this as a continuity plan. If my income stops today, my maybe salary stops today, I know next month I have an income. And I can continue like that for the rest of my life. So it ensures dignity in retirement. Just the way I'd say the way children get passed on from one house to another, we also see the same thing with parents. Yeah, it happens. One child takes care of a parent now, and then they're like, okay, take care of this parent for 3 months. It's because I have seen it. Yeah, because again, someone has to take care of them. You cannot just leave your parents to suffer. And then the way we say that we have to have conversation with our children on money, we also need to have conversation with our parents. If there's people who get conned are parents, yeah. So the reason why they trust everybody else is because you're not talking to them. So they see you as a child and you've not really involved them in money conversation, then they've not involved you in money conversation. So whoever it is that gives them let's say a money solution is the person who they've been constantly talking to, which could be a friend who ends up conning them. So you need to make sure that you are also in your parents' lives. Yes, talk to your kids about money, but also talk to your parents because there's also limited knowledge when it comes to money matters with your parents. Yeah. And then it also allows you to, allows intergenerational wealth, income that outlives you and turns your investment journey from short-term hustle to long-term legacy. So at this point in time, if you are employed, I would really advise you whether to sit down with your financial advisor to just check with whatever it is my employer is putting aside for me. Will it be enough for my retirement? If I'm to do the projections, how much will I receive per month? Because sometimes you reach there and then you realize the amount of money you'll be receiving per month is very little. And it means you'll have to really change your lifestyle. Okay, and if you've had many different employers and your pensions are all over, I would advise you to consolidate your pension, into one pot. So what I always advise is even if you're employed, make sure you have an individual pension plan. So every time you're moving, when you're putting down a resignation letter, start the process. So by the time you've left, you've already moved with your pension. You constantly move your pension, because what I'm seeing right now, I'm helping people sometimes consolidate like 7 different pensions from 7 different places that they worked. So it's only easier to put your affairs in order. And then also the annuity conversation. For your parents, if they didn't have a retirement plan, but maybe they have a piece of land, they could sell it if possible, and then they put it in an annuity so they can receive money every single month, because it will also really help them maintain their dignity so that they don't have to ask you for money all the time. Money actually just goes to them. So it's something that you could sit down with your parents and advise. So an exercise is, if your income stopped, which asset or plan continues to pay you? Yeah. That's more or less like your pension substitute. Now we are done. We're almost done. So you see now the protection role is now finally over. We started with the emergency fund layer. Then we went to the medical insurance, then life cover, then eventually the trust funds and the pension. So at the end of the day, even if life was to happen, it will not shock you that much, especially financially. I'm telling you, it's horrible to now go through whether it's grief or a sort of shock, and at the same time you have no money. At least if you have money, you can go to a therapist. Yeah, if you have money, you can take time off and just now try to figure your life out, compared to now making decisions from a place of survival mode. So this is now how the layers are. You can take a photo of that. So when these 5 stand together, you build a fortress, a very strong liquidity fortress, and your family has liquidity within a day, structure for a lifetime, and clarity for generation. So protection doesn't limit you, it liberates you. So we don't protect because we fear loss. We protect so generations to come never have to start from zero. Yeah? Because if we don't have a plan, we don't have liquidity, we don't have structure, it means your children will have to be pressing the restart button with every generation. But if you have a structure that carries your voice, that means it can continue. That makes you immortal. Yeah? I feel like if you have structure, you can live forever. So to start your legacy journey today, we are a protection company. We help investors and a lot of first generational wealth builders to protect and structure their family wealth. So if any of the things that I spoke about resonates with you, you can come and we have a conversation. Then we can help you design protection, not as an expense, but a tool for liquidity, structure, and freedom. Yes, thank you so much for your time. You can take my contact details there.